Good afternoon, everybody, and thank you all for being here. I am Oscar Williams-Grut, the Senior City Correspondent for Yahoo Finance UK, and I'll be running the next panel, which is Blockchain, the Future of Payments, ? Now, we've got a fantastic panel for you who span the gamut when it comes to payments, so without further ado, let me introduce them. We have Robert Wiecko from Dash, who is the COO of Dash, the specialist cryptocurrency for payments. Next up, we have Leonard Shrank, who is the former CEO of Swift, which, of course, you'll know is the bank-to-bank payment network. We also have Pauline Adam-Kalfon, who is the partner at PwC France in charge of blockchain and also looking after financial services. And finally, we have Marjan Delattine, who is Ripple's head of global banking. Thank you all for being here with me. As I said at the start there, we're here to discuss blockchain. Is it the future of payments? And of course, perhaps the most famous use of blockchain is Bitcoin, which was a payment envisioned as a payment use case, but these days remains a bit of a outlier for day-to-day payments and things like that. But that's not to say blockchain isn't being used in payments. And Pauline, given that you look across the spectrum at the sort of blockchain use cases in financial services, maybe you could give us a 1,000-yard view look at where blockchain is being used today.
So as you mentioned now, with Bitcoins and other cryptos, you can pay in some places. For example, in France, and I'm talking about retail payment here, there are a few bars. So you can now pay. But the question is, what are the volumes? I don't know, guys, who paid the pass here, the Paris Blockchain Week Summit pass, via crypto? Okay, and here we are in the crypto community. So I think it means everything. So it is possible, but the volumes are not there. So that's for the retail. Now, if we look at the wholesale, there are a few use cases that we see that are getting more and more mature, and I think we're going to talk about those. First, interboundaries payment. This is something, and I think this is something I could testify either for our clients and even for ourselves. There really are some savings in to use the blockchain. Second, also, and this is, and I'm coming back for the retail. In some countries, you are unbanked. It's very difficult to access bank, and if you don't have any account, it's very difficult to do, very simple things. So, for example, in Africa, where you have a good internet connection, good mobile connection, there are some very interesting use cases we're looking at. So, there are some use cases. Doesn't mean that the volumes won't grow. I don't know, but the volumes are not so much there in the retail space so far.
And Robert, perhaps picking up on the unbanked point there, I know Dash is quite popular in places like Venezuela and places where perhaps the traditional financial services infrastructure doesn't serve everybody's needs. Perhaps you could tell us a little bit about how Dash is being used, where it's being used, and why they're using it.
You were being very politically correct, saying that traditional infrastructure doesn't serve its needs right now in Venezuela. The financial system collapsed in Venezuela.
Well,
let's be serious about it, because it's a tragedy for people there. So and it causes that these people were simply looking for an alternative, and they found it in different meanings of payments, cryptocurrencies among them, and cryptocurrencies are becoming more and more popular in Venezuela. People use Bitcoin Hash and different kind of cryptocurrencies. Dash seems to be the most popular one, thanks to the instant confirmation and the very low price of fee, basically. The cost of payment is very low with Dash, so people do integrate Dash in many places in Venezuela. Even street workers, people who sell food on the streets, they do have their QR codes, and they sell food on the streets using with the Dash payments. It's there is no really alternative. With 2 million% of inflation, you cannot use cash. You cannot even use credit card, because as a merchant, you are having 3 days for confirmation of your transaction, right? After 3 days, you are losing all of your profit, and you are even paying more. You are losing like 60% of the price. And cash doesn't work. You would have to bring a truck of cash to buy a chicken or something like this. So cryptocurrencies do work currently in places where there is no alternative. So it seems like it's a perfect alternative where the situation is difficult, and it's becoming more and more popular. It's not Venezuela only. We can see a lot of interest in Colombia, in Ukraine, Turkey. Also remittances market between Venezuela and US, between Germany and Turkey, potentially really attractive solutions for cryptocurrencies. So yes, it's rising. I agree with you that it's small, but the industry has 10 years old. Is 10 years old,
and maybe on what you said, if you look at the crisis that was in Greece, you saw that just when the crisis started, the volumes of cryptos really rose, because exactly for the reasons you mentioned. So it's not only countries that have really high issues like Venezuela, but countries that are in the EU, like Greece.
Yeah, sure.
It was also the case.
Where there are troubles, there is more and more interest in cryptocurrencies. It's just a good alternative, and I think it's a good direction. Sometimes we as an industry, we do make this narrative that traditional financial industry has to fail in order for us to succeed. I think it's wrong. Better narrative would be, okay, let's create an alternative, working alternative, and let people choose what works for them.
And picking up on the alternative, working with the traditional financial services, takes us quite nicely onto Ripple, perhaps, which is obviously a cryptocurrency pitched towards international payments, and you guys are trying to work with banks, trying to get them to use that. Can you tell us a little bit about what sort of volumes you're seeing, the pickup among traditional institutions?
Well, just a bit of introduction about what is Ripple, probably, before getting to the crypto assets. So we are a global decentralized payment network. So banks and payment service providers, financial institutions, use actually Ripple to transact. It could be fiat currencies, so fiat to fiat, business as usual, but using the power of the blockchain based on a series of features such as immutability, security, low cost, and of course trust in a trustless world. I think the story of the digital assets, the way that we see that, we are not really in a use case of the retailers, we are in the use case of the institutional, and this is really addressing a problem. Because so far, some of the blockchains or use cases has been designed because we have a technology and let's find a problem. I don't think that it works like that. The technology is a means to an end, and it should bring in different experience. So when you look at the way that the payments internationally, cross-border payment is handled, due to the way that the business is designed, because there is no central or third party or no central bank dealing or keeping track of the volumes, you have a system which is called correspondent banking. And correspondent banking is a very complex process and creates lots of cost. Most of these costs are related to the management of the liquidity. And this means billions or trillions of money trapped in the accounts in order to move funds globally. And I think the way that we see the use case of the crypto asset, in this case XRP, which is a product which is live, is around how you can source on-demand liquidity. This has a big influence, especially for not necessarily big banks, because they have obviously a different range of capital, but smaller institutions that they pay a lot for maintaining capital in the destination account, in the nostro-vostro relationship, as we call it. They have really they are struggling actually with these costs, especially with the regulatory requirements. So clearly, the use case that we see is, rather than maintaining even accounts, or funds in the destination currency, how you can use the crypto assets, in this case XRP, to source on-demand liquidity when you need it and at a cheaper price. And this is, the product went live actually end of last year. We do have 10 financial institutions that actively are using that, and the volume is increasingly actually coming every day.
And Leonard, representing the sort of traditional networks, I mean, what do you make of all this? I hate to put you on the spot here, but do you see newcomers like Ripple as welcome innovation? Do you think that, you know, is it magic beans? What's your view on all this?
Well, first of all, thank you. I just say a few words about SWIFT. I was CEO of SWIFT for 15 years, from 1992 through 2007. And I thought a lot changed during that period. I had something to do with it. But since then, a heck of a lot has changed, and Bitcoin and blockchain is here. SWIFT, when I was there, carried about 6 trillion, that's T, a million, milliard, milliard, $6 trillion a day through its network. It's all the world's money. Now it's up to 10 trillion a day. So it's a big, one of the most successful cooperatives on the planet, certainly the most important financial system on the planet. I'll say one more thing about SWIFT, and then I'll comment. I'll answer your question. I've sat through, I don't know that much about blockchain. That's why I'm here, and I sat in this row and listened to every session here yesterday, and as much as I could listen to today. Learned a lot about blockchain. So, and learned a lot about banking. I think I'm in a gray chair. I'm the last to speak. I understand the view of bankers in the room, but everybody, who has a bank account in the audience? You know, yeah, okay. So I have three principles that pretty much apply to almost all the sessions that I heard, and I'm sure the ones I didn't hear as well. One is, which everyone will agree, you might not love your bank, but you trust them. So if you want to split a pizza with friends and you want to use some payment app, okay. If you're going to buy a house and you have to put a £100,000 down payment or €100,000 down payment, you're going to use your bank. And I'm from the wholesale side. I'm not talking retail. So one, you might not love your bank, but you trust them. Trust is huge. And we've heard a lot about the Internet of Trust, which is what blockchain is all about too. So one, banks have the trust. Two is about standards. Anyone can really engineer a standard, and I've heard a lot about standards. The hard part is getting everyone to use it, right? So that's trust and standards. So that's really the underpinnings of SWIFT. And the third is where I join a lot of you in the crowd, is about complacency and the banks with their dominant positions. Are they really treating the customers well? Are there inefficiencies that they're not solving? So the third one is, and I advise my banking clients, accelerate the inevitable. You know, you just can't sit there and move something on SWIFT in 20 seconds and take a week to give you credit for it. And that's what's happened in the last 10 years. It's gone from 3-day settlement to now same day, same hour, and they're even talking about instant. So when you're talking about wholesale payments, Ripple or wherever, the banks are going to be here for a while, but I certainly am excited about what blockchain can do and all of the cryptocurrencies. It's you know, basically I've worked for banks for 40 years, but I'm an information service. I'm an IT person, so that's my opening remark. And we'll continue the dialogue about anything else, but we should ask the questions. I don't want to dominate it. Thank you.
Well, I mean, I suppose on that point, I mean, do you think either Marjan or Leonard, can you see one day SWIFT and Ripple working together, or do you think it'll be an antagonistic relationship, or what is the end goal, I suppose, for Ripple?
Lenny, do you want to?
Look, as I said, two things happened since I left SWIFT. And a lot happened when I was there. But one, there was that famous hack of the Bank of Bangladesh. You know, we always used to say the endpoints of the weakness of SWIFT. If you leave your keys on a table and someone picks them up, they can start your car or get into your house. SWIFT was one of its end users was hacked. They lost $81 million. They tried to get $1 billion out of the New York Fed. So that's not good. And SWIFT since then has done a huge amount to tighten the security procedures of the endpoints. The second thing that's happened is this thing they call GPI, Global Payments Initiative. Only started a few years ago with SWIFT. The banks fix their back offices to some degree, and SWIFT put in APIs and tracking. And they're basically 40% of the payments now, that's 10 trillion times 0.4, you can all do the numbers there, is same day. And in some cases, it's within an hour. And it's not hard to imagine they can get to instant payment. So it shows the banks can operate and finally move. And that's what's going on. Now, Ripple is using this newer technology. Now, if you were going to start SWIFT today, would you do it the way they did it in 1973 to 1977? No. Would you build it with blockchain? I don't know. You know, there's a lot of opportunities out there. And I'm not anti-Ripple. I'm excited about the opportunities, and I wish them the best. And I think choice is good to have. Yeah. And so I'm happy to comment plus and minus about Ripple. Ripple's, you know, at $1 billion, right? You know, you got to start somewhere.
Marjan, right of response?
Let's come back to the main question that was around collaboration. I think, well, indeed, SWIFT has been there. It's a very well-established network. And as you rightly mentioned, many banks are using, financial institutions are using. I think, yeah, we could be complementary. Again, coming back to the choice of the market. We are sharing some customers, actually. Some customers are using Ripple, some customers are using SWIFT, and some customers are common. I think there has been some discussion in terms of the partnership or collaboration. We never concluded anything. But I think that goes back to the financial industry, how they want to see and how they want to leverage, actually, this new technology to complement the existing infrastructure.
And I think that's, you know, a lot says what was your previous job. What is the trend?
What is the trend? Me?
In your case, you were working for SWIFT?
It's true. I have been in the two worlds, so probably I have a biased view of things, but it can be complementary because SWIFT, of course, is a messaging system. What blockchain technology is bringing is a settlement, is a finality of the payments in an instant payment basis. So this technology is there, and I think this is bringing a real value in terms of the experience to the users. So yeah, the choice goes back to the users.
And maybe if I can give the view with our clients, I mean, the discussions we have with our clients, and including financial institution, is it really faster and cheaper? That's the question. So I think there is no position, at least, I mean, there is no dogmatic position, we are against the blockchain, or no. If they find out that it really is faster and cheaper, and when we talk about faster, it's payment and settlement, as you say, because this is the whole thing, then they are eager to investigate, and they are investigating. Otherwise, they don't want to do blockchain for blockchain in a payment.
Yeah, and precisely, if I just add that, sorry, without taking the whole control over this conversation, I think I joined Ripple 2 years ago, and the network went live June. We have signed up 200 financial institutions, more than 200 now, and really signing every quarter more than 25, 30. So these institutions are not in a mode of coming and saying, okay, I will do a proof of concept, I will pilot that. No, they are really implementing on the backbone of their systems. So that shows actually the trust that financial industry is now establishing towards a new technology like Ripple or blockchain in general.
And just, I want to bring in Leonard here, because something we spoke about ahead of the panel was, I wonder if there's such a thing as being too fast with settling payments, because obviously you mentioned there the SWIFT hack with the Bangladesh bank. Isn't part of the reason some of this latency is built in is so that you can double, triple check, make sure that the money's gone to the right place? Whereas if you have a fat finger error and it's immediately settled, you know, is there a human element that we need to consider, even if the technology is perfect?
Well, it's a good point. Although the goal, I think, is to get as close to the same instant payment as possible. But one of the new features of this Global Payments Initiative is the ability to track your payment, because it has a lot of hops sometimes. And secondly, the ability to stop and recall, which is a really neat feature there, because a lot of the counterparties are putting in anomaly detectors and what have you, because you know it's a dangerous world out there. So yes and no. The goal is instant, but they're bragging about the features of stop and recall. They didn't have that before. It was hard. It was hard to do. I just want to make a point about the alternatives there. I listened to one of the panels, and I think that one of the headlines of this thing is Maya Vujinovic yesterday made a great point that blockchain isn't just a technology, it's a forcing mechanism to change processes. You think about that. You're re-engineering the financial system. Here, the payments startups are trying to do it faster, better, cheaper. By the way, Swift payment is 10 cents, 20 cents at the bank. They charge you $40. You might want to ask yourself why.
It's a sales pitch.
There's a concept there called total cost of ownership. The back offices of the banks are very legacy-oriented, and there's a lot of expense in that, and they're working hard to upgrade. But to get to the instant payment, they've got to not just have batch processing once a day to process it. They've got to get to be 724. So there's a lot of work for the banks to do, which means there's a lot of opportunity for the startups here to take advantage of them. And, think big, start small, test quickly, scale fast. Don't try to do too much. You can do it.
Of course, the technology is there already. We are totally ready for, for instant transactions, right? At very, very low cost, much lower than Swift and any existing traditional solution, right? I think that what has to be changed with banks is our processes and also a kind of mindset. I tell you a story. Like a half year ago, I was purchasing a lamp from Australia, and I paid with IBAN, right? After 2 weeks, the merchant is asking, where is my payment? I sent it to you 2 weeks ago. Oh, I didn't receive anything. So I'm asking my bank where my money went. My bank says, we don't know. And you have to pay 80 euros, so we start investigating. Can you imagine this? This is how the system works. This is what kind of mindset these people have. And it's a kind of arrogance. That's why, yesterday it was Marius from Lithuanian Central Bank, and he had a great statement. Something happened in 2008, and there is no more trust in banking industry. That's why this conference takes place, and that's why all of these people sit here, because, something happened, and to be honest, nothing has been fixed since then.
And I want to shift gears slightly, and we talked as popular point there. Not a lot of love for banks here. We talked a little bit about use cases that perhaps are pain points where things are failing, be it in Venezuela or with correspondent banking that's just convoluted. I wonder if if these are the specific use cases and geographies where we see blockchain payments taking hold, or is the end goal that one day it's as prevalent around the world for every use case and you have a choice? Do you want to use the traditional financial system, or do you want to use crypto blockchain payments?
From our perspective, remittances today is where you see lots of underserved banks, because typically the current infrastructure has not been designed to cope with that. The current infrastructure mainly is for large corporates, and it's working very well, as Lenny mentioned as well. But when you get to the remittances, it's very expensive and it's very costly. And I think this is more than just, luxury of the technology. It's really people that works and send money home. So it's essential. And that's where we see a real take-up, where we see also the usage of the digital assets by payment service providers to source on-demand liquidity, to cut the cost, to provide a different experience. Secondly, I think the financial inclusion, I think blockchain is there to enable the unbanked to be connected to the global economy. Globalization today is happening. There are many people that are today somehow disappointed because we don't have an interoperability between the systems. We do have interoperability in terms of data, so we use internet. We do have in terms of goods, but in terms of the value, today there is no interoperability. I think blockchain, the promise of blockchain in the world that there are millions, billions of people unbanked, is how you can establish and connect them to the global economy.
and women also.
Women, of course.
Lots of
Most
women.
of them are women, by the way.
But that's true. That's a way to include some women that have, they just have to ask the permission to their husband to be able to pay. So it really is a tool to do better inclusion. Maybe that's for some areas where people don't have access to payment yet. But maybe if we can come back to corporate payments. You mentioned the fact that there are some savings to be done. For example, a company like PwC, it's a global company. We have firms everywhere. And you can't imagine the processes when we have to do some billing, inter-office billing. There is all nothing is standardized. It's all, mails. You have to decide what will be the rate. And it's a lot of work. So PwC Australia, together with PwC US, launched an initiative to use the blockchain to do all the inter-office billing. And PwC UK, PwC France is going to join in the coming months this initiative. And we, from the very, very first results we're seeing, we gain a lot of we're gaining a lot of efficiency, lots of transparency, because at the end it's a question of trust in between the offices. So there are really some people that don't access to payments now that will be exactly like you mentioned, but it's also a way to do differently things that are not efficient today.
The whole treasury management.
And Robert, I want to bring you in on this point here. I mean, obviously we began the panel discussing use cases in Venezuela, Ukraine, places like that where there's a need, something's failed. Do you see long-term that things like Dash will be used everywhere as a sort of choice rather than necessarily necessity?
Oh, that would be, speculation. I hope Dash will be used, right? We are bringing a lot of advantages for business users, for individuals, but at the same time I'm not being naive that like Swift is switching to Ripple or Dash or any other blockchain. Probably they have invested billions in their infrastructure, so right now we should expect they saying, okay, we can get rid of our infrastructure and switch to blockchain. No, it won't happen. That would be, it's impossible. All of those companies won't disappear. So my hope is that we will create a kind of alternative, and we will work in finance, giving people, customers, institutional customers, and retailers, and end users, a kind of alternative. Because right now there is no alternative, actually, right? You saw how many people use cryptocurrencies at the very beginning. So, yeah, there are a couple of passionates, like me, for example. I bought a ticket, plane ticket, paying crypto. I booked my hotel paying crypto, but I seriously doubt that many people did the same, right? And that there are different reasons for that. Cryptocurrencies are very complicated. And
client experience, right? Because we can't talk payment without talking about client experience. It's so tough. You need to be expert to use it as
user experience is horrible.
A normal user. You need to be expert.
Yeah. So there are a couple of things to change before that there is a real alternative.
Yeah, but I agree with a lot what you're saying. Financial services for the poor. In Africa, you have your currency, your cryptocurrency, your mobile phone. It's better than putting the cash under your mattress. That's very important. Every time a tanker ship docks in Singapore Harbor or in Le Havre, you have 1,000 kilos of paper. That's got to be re-engineered. Security settlement, huge opportunities in financial areas for something new, not SWIFT.
Yeah,
to do. So who knows? If we meet here in 5 years or 10 years, what we'll be talking about.
Yes, of course. We even did a kind of analysis internally in Dash, and we identified 5 pillars when we want to implement our solution. Those are very specific areas like remittances market, hyperinflation.
Worker remittances is a $500 billion year opportunities. Poor people sending money home to their families, and Western Union takes 25% of the $100. Sure. So yes.
Cash-based industries, high chargeback industries. The opportunities are there. We just need to, make a step towards them.
To make it work.
Now, unfortunately, we're running out of time. I'm sure we could talk about payments for all afternoon. But just before we go, I would love to hear, on the topic of payments and blockchain and cryptocurrency, I'd love to hear each of the panel's view on JPM Coin, this new internal cryptocurrency that JP Morgan has come out with a big sort of fanfare. If you could each maybe give quick 20-second thoughts on it. Is it a fad? Is it going to spur adoption? Do we think it's the future? Are all these companies going to have their own internal cryptocurrencies? Marjan, what are your thoughts?
I think it's great that JPM has done this, because this is validating our hypothesis. So first thing. Now, the question is centralized versus decentralized. How far, again, a US-backed asset only in a private network is aligned with what is blockchain, or what is a digital asset that needs to be neutral and out of the geopolitical nuances? That's still to be.
Pauline?
Yeah, maybe more globally, what's interesting, you're talking about centralization, decentralization. You mentioned JP Morgan, you could have mentioned, we heard names like Facebook and so on. This is also a way for corporates to get the data on what some of the clients are doing. Companies like Facebook, they know that the clients, they click on a site, but they don't know what they pay. Here it's a way also to get data that they don't have currently. So yes, this is interesting.
Leonard?
Yeah, I think where there are re-engineering opportunities, there is opportunities for blockchain and the related technologies. That's what JP Morgan was doing there. Rather than using the legacy systems, all the heavy infrastructure, COBOL-based, you don't even know what COBOL is. This is you start fresh, and this is the fresh way to do it. So sure, no problem.
And Robert, finally.
JP Morgan Coin? Yeah, it was a nice try.
What a great way to end the panel. Thank you very much. Please join me in giving a big hand to our fantastic panel, and I hope you enjoy the rest of the conference.